Right, so here's a 4-hour chart on ES. Just let you know I'm bullish. I think we're gonna try to press higher, and we'll jump into a 15-minute time frame. See that fair value gap right there? I missed that dilly-dallying waiting for this Camtasia platform to start. So this is where I believe we're going to rip up into and higher. Okay, and I may let's see if I'll use that one. Right, and then put the stop below there. It's a little wide because it must be for non-farm payrolls. Wild and woolly price action. So right in there, I'll make it white. So it's a contrast. So inside that 4-hour fair value gap, it's in a discount relative to that low, to that high. We drop down. There's a small little gap in here. I'm watching and see how it behaves in here as well. But this is the one that's the inefficiency. Oh, it might give us another opportunity. Oh, I will take that. Thank you so much. All right, so that might look like a lot of money to you, but it's really not in the grand scheme of things. And we'll take 5 off above here. And just so you understand what I'm referring to here and what's making this even important at all, is that this is a Judas swing. Yes, initially we had this little run up in here, but notice it did not take the buy side here, here, or here. This is what they're tricking traders to trust this resistance, okay? In here, this inefficiency, when price started to rally up, and between this high being taken out, right here, and this low forming, that range, if we look through that and we only focus on this segment of price action right in here. Okay, and I'm going to color that yellow. Okay, so all of this, I don't know why I did that. There. So all of this price range that ran from this area here to here, all that price run, what I'm looking at is how price started the rally here, came up to this candle's high, and then it retraded, repriced back down into the low end here. So from this high, that candle, to that candle's low, this is all efficiently delivered price action. Meaning that it's like a paint roller analogy I use. Like if you're painting your wall at your home, when you apply the paint to the roller and you place the roller against the wall and you roll it up, the first few inches of the paint being delivered to the wall, it's ample, meaning that it's a very significant amount of paint being distributed to the wall surface. But eventually, as that roller keeps being pressed higher, it runs out of the amount of paint that would be equally distributed on the surface of the wall. And you'll start seeing these little porous pockets, which is what this is being shown here, this little shaded area, which is that one single candle. Let me take that off now. So this inefficiency here, just like if you were rolling a paint roller with paint and applying it to this area here, well, looking back at where you just rolled the paint roller, this is a little area where the paint wasn't equally distributed because of this very candle. Let me widen them a little bit. This candle here, it's high right there. And the next candle after the big up close candle here, there's a gap where there was nothing offered back down to at least touch this candle's high. So that's what makes a fair value gap a fair value gap. Okay. Why did I name it and coin it a fair value gap? It's offering fair value. If you're bullish, and this is the part that still escapes many of you that are running around trying to talk about fair value gaps when you most of the time don't really know what you're doing yet. And I understand the zeal. It's exciting because you're handling something that you know and see it works, and you're discovering multifacets to something that you're on the road to progression, to understanding. But don't try to teach it yet because you don't know what you're doing yet. But I appreciate and love the zeal and all of your uh, excitement about it. But this little area in here, it's lacking movement back down to at least touch this candle's high. Okay, so because this candle's high and that candle's low, there's only one pass in delivery of price, and it's going up. You see that? So with that movement up, how does that redistribute efficiency in market delivery for price? It must do what? Offer it going back down at a later time. Well, we're seeing at 8:30, which is non-farm payroll Friday. This is where we're at. Happy non-farm payroll. The market drops back down into that area, overshoots it a little bit, but that's fine because all of this area in here is a balanced price range. So it goes down into the range. I mentioned it to you live, and it's part of that 4-hour fair value gap. Okay, so the market has shown a willingness to want to reach back up in to this area up in here. So what we're going to be watching now is, does price want to at least trade back above the consequent encroachment of this wick? So here we go. It just got taken out. So now I can roll my stop to break even, plus commissions, plus a small little profit. And why am I not jamming it all the way back up here? Because it could respect this same 4-hour fair value gap high. Notice I have it sitting right here. You're probably wondering, well, isn't that rate below that low where there's sell side? They've already done the damage and ripped through all of that. Okay, so what I want to do is I'm going to sit and watch. Does it give me that close? Any close above this consequent encroachment level is going to be like the hand of the dealers, okay, being shown to you. They're going to show you their cards if it can close above that level, meaning that I would like to see it then run up there and hit my limit order. And then at that time, or how it trades there, if at all, because I could be wrong, then I'll determine whether or not I want to take more off, manually, or if I get stopped out. Everything remains, uncertain right now. And that's the reason why I don't like trading non-farm payroll, because it really is a gamble. And if I had a consequent encroachment level, if this candle can close above it, then that to me indicates that the algorithm should, if it just doesn't already run right up there and reach for it, as long as it closes above there, I'll trust that it will run for at least my first limit order resting above here. But I'm going to be very careful about how it trades here, because it can run up, rip that, and then just drop and fall out of the 450. I'm sorry, the 4,592s. All right, so we closed above it. Now, my mindset is I trust. I don't get afraid. I don't become nervous because we're seeing a down close candle in formation. It doesn't freak me out. It doesn't cause any anxiety. So I'm going to take this Fibonacci off because we've already accomplished the method here by explaining to you what I was looking for. But I'm relaxed. What am I thinking? How far can it go back down? Well, we have these two consecutive down close candles. That body right there, that could be treated as an order block. So it can trade back down, rip into this here, and then go higher. I don't want to see it do that, because the fact that it needs to go back down into this as an order block, if it needs to do that, that's far less probability in my favor. I want to see it not do so. I'm watching this candle here. And how it's behaving. I'm gonna put that fib back on just to show you in relationship to that wick right here. So all of this was a initial raid, and then they dropped it all the way back down into a deep discount. We've had one close above. This one didn't close above, and we're now just below it. So I'm demanding price action to show me another close above here. If this doesn't close above it, I will take 3 contracts off just to fund the position and then get a little bit better payment for my time. Okay, about 40 seconds to the close of that candle. We're on a 5-minute candlestick chart, by the way. I had folks asking, can you do things with the 5-minute chart? I don't like the 1-minute chart, it's too fast. It's the same market. The fluctuations that you're watching from 4585.50 to 0.75, that's happening the same speed on a 1-minute chart. It's happening the same speed on a 5-second chart or a 1-second chart. It's the same. The price action is the same. You need to stop thinking and being imprisoned by time frames. All right, so it didn't close. You see that? So I'm going to take 3 off there. So now I'm well funded on this. And now if it were to come all the way back down in to stop me out, it's completely irrelevant now. I've made more than the average person makes in a week's wage, even a professional wage. And I've done so in just a few minutes of the worst trading environment day of the month, which is non-farm payroll Friday. And look how the market's behaving here. So we're trading into that order block. And this is where I would demand the importance of, no, not importance, but the characteristic that this should send price higher. We're in this area here. All of this price action here was a raid. That's my interpretation of price action. And I'm believing that they're going to want to rip up into this area here because they want to attack people that are short. And they enticed people to get short. But they stopped anyone that was already short ahead of time before 8:30. They come up, knock them out, so they can't get a part of this move where they can get really good profits and cover at a really nice, handsome profit. Then they took it all the way back up here, thinking, okay, there's no necessity for price to do what? Pay long holders. Nobody wants to be long. Nobody would trust being short as a smart money mindset. They want to be long. Dipping down here is the discount. This is all trap. But they canceled out the potential for profitability for anyone that was short that trailed their stop loss right in here. So if they didn't trail their stop loss and were short from back here, where's their stop at? Right there. See that? So as soon as the market decides if it wants to go up here, I will take 1 off right above this high manually if it allows me to do so. I will not move my stop loss from where it is right now.